Hey everyone, welcome to my YouTube channel. My name is Walker FX, and if you are new to trading, this video is the best for you to start your trading journey as a beginner. So in this video, I'm going to break down everything you need to know as a beginner, step by step, what Forex is actually, all the way to understanding market structure and also trade like a professional trader. So make sure you watch to the end because this is going to be your foundations as a beginner, right? So let's quickly start by explaining what Forex is. So what is Forex? Forex simply stands for foreign exchange. So it is the market where currencies are bought and sold. So for example, if you exchange US dollar for euros, you are participating in the Forex market. This market is the largest financial market in the world with over 6 trillion traded every day or daily. 6 trillion. So you have to know how big or large the Forex market is. Unlike stock market, Forex market is open 24 hours a day and 5 days a week. So we'll move on to currency pairs. What is currency pair? So in Forex, we don't trade just a single currency. We trade pairs. For example, Euro USD. So the Euro against the USD, British Pound against the USD, GBP against Japanese Yen, Euro USD against Japanese Yen, Gold against USD, BTC against USD. So these are kind of pairs. We don't just trade a single pairs. So the first currency is always called the base currency, and the second currency is called the quote currency. So assuming if Euro USD goes up, it means the euro is getting stronger compared to the dollar, right? Since the euro is the base currency and the dollar is the quote currency. So if the euro is going up, the base currency is getting stronger and the quote currency is getting weaker. That's why it's going up. So if it's going down, which means the quote currency is getting stronger and the base currency is getting weaker, right? So let's move on to the next section, which is buying and selling. So in Forex, there are only two actions. You can buy, which is go long if you think price will go up, and you can sell, go short if you think price will go down. Either ways you can make money, if price goes your way. So that's simple. If you buy low and price go higher, you make profit. If you sell high and price goes lower, you also make profit, right? So we'll also go to the next section, which is pips and lot sizes. So to measure movement in Forex, we use something called a pip. A pip is the smallest movement. A pip is the smallest price movement in the market. So the way you see how prices are moving, those are called pips. Price movement in the market is called pips, right? So now when you trade, you also choose a lot size, which determines how much money you are risking. As a beginner, always I will advise you to start small. Risk management is everything. Risk management is really everything you need to know in Forex, right? Because that's the most important thing as well. So what moves the market? Someone will ask, what moves the market? Forex prices moves because of a lot of things. We have supply and demand. We have the news and economic events, interest rates, market sentiments, and all that. But here's the truth most beginners don't hear, right? You don't need to understand everything at once. In Forex, you don't need to understand everything at once. What you really need to understand is price action. Price action. So someone will ask, what is price action? Price action is simply how price moves on the chart. instead of relying on indicators, we read the market using candlesticks, higher highs and higher lows, and market structure and all that. This is where real trading starts, right? Yeah. So we will also be moving to market structure. Now let's talk about one of the most important thing or concept, market structure. The market moves in patterns, right? Which is uptrend, downtrend, and ranging market. So the market has three ways of movement: the uptrend, the downtrend, or the ranging market, right? So how do we know that market is moving higher? Price keeps on creating higher highs and higher lows. So let's go to the chart. Let's start identifying how we know that market is in an uptrend. So price starts from here, gives us a higher low, gives us a higher high, gives us a higher low, higher high, higher low, higher high, and higher low, right? So this is how we get to know market is in an uptrend, right? So let's go to a downtrend. Downtrend also, in an uptrend, market creates higher highs and higher lows. So downtrend is the opposite. Market creates higher low, lower low, lower high, lower low, lower high, lower low. So why do we call it lower low or lower high or lower low? Because we could see market is breaking lows and forming new lows, right? We broke this low and formed a new low, came here to create a lower high, and came down again to also break this low, forming another lower low over here. Same thing implies to the uptrend. This is higher low, this is higher low, higher high, higher low, higher high. So market keeps breaking structure, forming new highs. Yeah, forming new highs. And in the ranging market, we also have what we can call it, some people call it ranging market, some people call it consolidation, but consolidation is what most people know. So market goes, yeah, it's not breaking highs, it's not breaking lows. These are called ranging markets. Yeah, this is what we call ranging markets, right? Price is not giving us any clear structure, right? But you can see here, price is in an uptrend, breaking highs, forming new highs and all that. So you know that price is in an uptrend. Here too, price keeps on breaking lows, forming new lows, which means price is in a downtrend. But here it's a ranging market. We don't know specifically what the market is doing. It's consolidating. So these are the three movements in the market: uptrend, downtrend, and ranging markets, right? So let's go to break of structure. A key concept in market structure is break of structure. For example, in an uptrend, if price breaks the previous high, it has broken a structure and formed a new structure, right? This is simple because this is a beginner friendly video, so everything has to be from the basics and very simple. We make it simple and not complicated. So this is what we call break of structure. We break the new highs and create a new high, right? We are breaking structures. Same thing implies to downtrend. We break lows. Price broke this previous low, created a new low, came here to break this previous low again. So it's breaking structures, right? Yeah. So why most beginners fail? They complicate things. Like I said, most beginners complicate a whole lot of things. Yeah, they complicate a lot of things. You don't have to complicate a whole lot of things in trading, you understand? Yeah, they don't understand structure. You need to know the real movement of the market. You need to understand the price action or the market structure, how the market is behaving. That's the most important thing as well you need to understand, right? They don't manage risk. Like I said, risk management is everything you need. Yeah, because we want to be in the market for a longer time. You don't want to lose a trade and lose all your capital, right? So you need to practice proper risk management. They chase profits instead of learning. Most people think about trading and they think, oh, trading, let me go and trade, I'm gonna make profit. They don't really focus on learning, the learning side. They mostly focus on chasing money and they end up losing a whole lot of money, right? Yeah, so final advice, you don't have to focus on understanding the charts and everything. Learn and practice on demo account. Don't rush into real money and be patient. This is just a skill, not just luck. So we might go to the chart. This is basically we are wrapping things up and all that. We are just making, we are just starting. So we'll go to the charts and see some 1 or 2 examples how market moves in the real charts. This one is just like a raw sketch, just to make you understand the basics and all that. So market structure, support and resistance. So basically, let's use this ranging market for our support and resistance. So basically, what we know, support is always at the bottom here and resistance is over here, right? Resistance is over here. So why is it a support? Anytime price comes down here, it rejects. Anytime price comes down here, it rejects. Anytime price comes down here, it rejects. Why is this a resistance? This is a support. Support can always be found at the low. Resistance is always found at the highs, right? So this is a resistance. Anytime price gets here, it pushes to the downside. Anytime price gets here, it pushes to the downside. So this is a resistance and this is a support level. Simple as ABC, right? We can find resistance and support in ranging market, and we can also find it in uptrends or downtrend with the help of trend lines, right? Trend lines. So basically, when we draw this trend line in this uptrend, where can we see our support? This is our support level. Price got here, rejected, came here, came to this level again, rejected, came to this level again. So price is respecting the trend line. So basically, this is a support level and this is a resistance level as well. Anytime price gets here, it rejects. Anytime price gets here, it rejects, right? So as a beginner, this is the strategy I will advise you to learn, right? Learn support and resistance, right? Anytime price gets to the support level, you look for confirmations and you buy. Anytime price gets to the resistance level, you look for confirmations and you sell. This is just for the start, right? Same thing implies to the selling for the sales, right? Anytime price gets here, it sells. Anytime price gets here, it rejects. Anytime price gets here, it bounces down. Anytime price gets here, it bounces up. So this is our support, this is our resistance. Like I said, resistance are found higher and supports are found lower, right? Simple as ABC. Let's go to time frames. So what are time frames? In trading, we have different types of we have different time frames and all that. We start from the monthly time frame. Let's go to the chart. So we start from the monthly time frame. We are on the monthly time frame, so which means every candlestick you see here, every one candlestick represents 1 month, right? So assuming this one is January, this whole candlestick represents January. The next one represents February, March, April, May, June, just like that. So when you're on the monthly time frame, each candlestick represents 1 month. When you're on the weekly time frame, same like that, each candlestick represents 1 week, just like that. Go down like that. On the daily time frame, each candlestick represents 1 day. So the whole of the day, this is what happened in the market. The next day, this is what happened. The next day, this is what happened. Go to the 4-hour time frame, same thing like that. Any candlestick or each candlestick represents the 4-hour time frame, represents 4 hour or what happened within the 4 hour. We are on the 1 hour time frame, same like that, right? So these are the time frames on the charts. These are basically the time frames. So let's go and do a quick live analysis on the market structure and also find our support and resistance zones. Yeah, so one thing you need to know as a beginner is you need to first identify the trend of the market, right? We need to first identify the trend of the market. So when we look at this chart, when we look at this chart here, we could clearly see, okay, let's start from here. When we look from here, we could clearly see market is in a downtrend, right? Market is in a downtrend, like we said, creating lower high, lower low, lower high, lower low, lower high, and lower low. So basically we are in a downtrend, right? And same thing implies here. This side we are in an uptrend. How do we know we are in an uptrend? Market creates what? Higher low is here, came to create, sorry, this one is higher low, higher high, higher low, higher high, because we are breaking previous highs and creating new highs, right? Higher low, higher high, and higher low, right? So what do we expect when price creates higher low? We expect a higher high to the downside, to the upside, right? Yeah, just like that. So we have something we call change of character, right? Change of character. So here we know that market is in a downtrend. Market is in a downtrend over here, right? Yeah, market is in a downtrend over here. So we keep creating lower lows, lower highs, lower lows, lower highs. So as soon as we could see that this side price broke this side, so we stopped creating lower lows and lower highs and started creating higher highs and higher lows, which means we have changed character, or we have shifted from downtrend towards uptrend, right? This is what we call change of character, when price shifts from one trend to the opposite trends. Assuming we are in a downtrend, when price shift from downtrend to an uptrend, it's called change of character, right? Yeah, so this is how we see change of character. You could notice that price was selling over here, and when it got to this point, we broke this structure and started creating higher lows and higher highs over there, right? So basically we have shifted or changed character. That's what we call change of character. So don't confuse yourself with change of character and break of structure. Break of structure is when we break structure and form new structure. Change of character is when we change, character, like we shift from a trend to a particular trend. Assuming we are in a downtrend, when price breaks previous highs of the downtrend and create new highs, we've shifted from downtrend to uptrend now. We've changed character. But break of structure is almost the same, always constant, either being in a downtrend or uptrend. We always see break of structure, right? Yeah, so here let's find our support level we can find our support level using a trend line. So you could know that this is our trend line over there. This is our trend line over here. So and price got here, it bounced up, it got here, it bounced up, it got to this zone, it gave us a bounce up, it got to this zone or this line as well. So this whole level is a support level, right? Anytime price gets to this support level, it bounces up. So as a beginner, what are you going to do? And for you to know a support level or resistance level is valid, we need to get one or two or three touches, right? So it touched here 1, 2, it touched here 1, it touched here 2 times. So the third touch we can ignore here, and the third touch over here, if you are a beginner, you can take your entry over there. You can just take your buy entry over there, and you put your stop loss below, and you take profits upward over here, just like that. This is a simple strategy for a beginner, just like that, right? Just like this. Very simple. Let's do one for the downtrend. This is the downtrend one. So we got one touch, two touches, one touch over here, two touches over here. So the third touch over here, we can take our sell position, we can take our sell over here and target that side. So this is also like a simple strategy for a beginner, support and resistance strategy, right? Simple as ABC. So yeah, I wouldn't like to complicate a whole lot of things. Let's find support and resistance in a ranging market. Over here, over downside over here. So what did we see over here? Anytime price gets here, it rejects. Anytime price gets here, it rejects. So the third touch, what are we going to do? We just take our sell position, put your stop loss here, put your sell over here, price sold, right? Price sold. Simple as ABC for resistance. For support, also we got our support level here. Price give us first touch, give us second touch, and the third touch, what are you going to do with the third touch? You just take your buy positions over there. You take your buy positions over there and your stop loss below here, and you take profit above over there, just like that. So this is basically, you know, a beginner strategy. I will advise you, you know, when you are starting, you need to learn this. As time goes on, then you will be used to the charts and you will find different entries and different ways of approaching the market. So for now, this is what I can teach you as a beginner. In our next video, we are going to learn how to find entries, you know, because entries are also important So we are going to learn how to find entries, yeah. So go subscribe to my channel, and in our next video, when I upload the video, you're gonna see notifications. Turn your notifications on. Yeah. So I'm done. Have a nice day and see you in the next video. Peace.